What's up, everyone? Good morning, YouTube, morning, trade pros. I had a few technical difficulties there. I always want to just use the front camera here, but it always just sends me to this other camera. So the camera doesn't work. That front camera doesn't work, but we finally figured it out. So good morning, everyone. It is Thursday. We are almost there. The week is almost over. And a few main things that I do want to talk about today. Number one, the main massive topic that we have is today we start I think it's like a 2 or 3 day, I believe it's 3 days. There's 25th, 26th, 27th. I think it ends on 27th. We have a Jackson Hole Symposium, an economic event that is a main thing that traders have been waiting for realistically this week. It seems like every week there's some kind of economic event, some kind of Fed talk, some kind of news that everyone just sits to the sideline and just watches and waits for low volume leading into that event. And then the events are usually a few key lines here and there, and then we get that regular quote unquote movement. We get a pop to either end of the market, and then business as usual. We just wait for the next event. So first, before we talk about that Jackson Hole Symposium, I do want to talk about Tesla, right? Tesla did do a 3-for-1 stock split. They're trading at the new split price. And this is important for, I guess, investors and even just equity traders that trade options or equities. The Tesla stock split, we're at $300 a share right now after that split. And it seems like Elon just splits whenever he gets the chance. There was a lot of flow on the bull side into splits, and that's what usually happens. Price does run up in a lot of stocks before the split actually happens, and then we get some kind of wane off of that upside. So we'll see today if they actually slip that or if they hold it. There's a key level on Tesla at 301.70, 301.50 in that area that I would like to see prices hold above if we are actually going to target some of these upside moves. There's still some bullish flow on Tesla, but usually the way that things pick up after a stock split is that we do flip to the opposite end, which is usually the bear side after that split, considering that over the last few days, Tesla has actually held up pretty well and has done pretty well to hold up for the bull side in relation to the overall market. So if you're trading Tesla today, just keep in mind there's going to be a lot of repositioning in it. There's probably going to be a decent amount of volume in Tesla, and it would be one of the names that I'm looking to trade, especially on options, because what happens after a split is that number one, you'll get more, if you were holding throughout the split, you'll get more options at a different price. Number two, you are going to now have a cheaper asset to trade, just like we saw with Google and Amazon. Realistically, it's going to cost less per contract in terms of premium to trade Tesla. So there could be a lot of volume that pumps in the market from a lot of people that were waiting just for that. So keep that in mind if we're going forward and looking at Tesla today. Now, the main topic of conversation, the Jackson Hole that everyone's waiting for, retailers, institutional investors, traders, whatever the case may be. And we're starting to take note of the movement leading up to the Jackson Hole. This is an annual economic symposium, and every year it's fairly important, but this year, considering what the macro circumstances are in the market, there is a lot more importance, I would say, as well as a cohesive swing being seen amongst assets like stocks, bonds, commodity leading up into this. So while we have we wait for the full breakdown of Fed Chair Powell's speech, there are some analyst calls that we could look ahead into based on Goldman Sachs that I want to take note of, BMO, and some other analysts, JP Morgan, all that stuff. So pretty much what we're going to see through is Jackson Hole. I would say fairly similar to somewhat of the Fed events where we do talk about rate hikes, rate cuts, whatever the case may be, those main Fed events where we do talk about some of the economic policies, monetary policies, where we're headed, what we're looking for. And it seems like one of those intermediary Fed events, as some might say. So from Goldman Sachs, we have a chief economist that talks about this, and he says that I think Jerome Powell will outlay, as he did in the last press conference, for slowing the pace of increase. We had 275 basis point moves, and the expectation, barring significant data surprises in September, would be a 50 basis point hike, says Goldman Sachs. So we'll see how that shapes up. I do want to just take a look at the FOMC Fed dot, or the probability of what the rate hikes look like in September, because that is coming up fairly quickly here. And as this loads, me see here. Just cut it off. I don't know what the exact percentages are. So as it stands right now, there's still a 60% chance of a 75 basis point hike coming in September. Now, naturally, that could change, like Goldman Sachs chief economist said, based on the economic data. And today could be one of those shifting events based on what we have in terms of a macro sense. So he also says, I don't think Jerome Powell will be specific about the number, naturally, but I do think that that he'll be saying there is a risk of over tightening, and therefore it would make sense to go a little slower than the outsized increases. Now, keep in mind, the ECB is also looking to aggressively hike. They're a little farther behind than the US, right? We have an apparent 100 basis point hike coming out of the ECB. So it's something that we have to consider as these economies are intertwined fairly significant. So it's safe to say it's safe to assume that one of Powell's objectives will be to communicate that there remains work to be done to combat inflation and the hiking cycle isn't nearing an end. This is from BMO Capital Markets. And like like we saw in the last inflation number, there's one more inflation number before the actual Fed event comes, and we do see those hikes. But as we saw in the last inflation number, there's quote unquote a topping figure. Of course, we'll need to see a multi-month average for that to actually be of any significance. But if things lay out as they appear to be, there could be a topping out inflation. There's a few things to consider. A lot of analysts from these big institutions have looked out for a very heavy increase in energy prices coming up into the end of the year. Naturally, we have the eurozone that is going to be impacted drastically by those winter measures in terms of energy prices, right? Expecting hikes from that. And generally, the winter seasonality for energy prices does increase. So last time around, energy prices were a contributor to the inflation's decrease. They dropped almost 8%. So that's something that we do have to consider. It was a large factor in that. So if that gets taken out of the equation, you have shelter and food that's been drastically increasing. I don't think these inflation numbers are in a topping out area just yet. So we'll see what he has to say about that as well. Inflation is going to be one of the main topics, and obviously the overall macro sense of the economy. So uh, on the other side, we have a State Street Global advisor talking about this as well. Throughout this year, what we've seen is volatility around the Fed funds rate and has created overall market volatility. And I think that all of this trying to find that level has induced this volatility. And I think the markets are going to underestimate where the Fed will end up. So this is very interesting because a lot of different institutions are kind of in different ballparks here. It just seems like an estimation game based on the data that is presented before you, right? And a lot of people take that data differently and think differently based on the data that they're given. Even though the data is the same, there's interpretations of what the policies and monetary shifts might be. So keep that in mind. It just seems like no one really knows what the hell's going to happen in a year. And I don't think the Fed does either. From JP Morgan, we maintain that inflation will resolve on its own distortion fade and likely drive a Fed pivot. This is Marco Kolanovich, famous JP Morgan global market strategist. In Chair Powell's remarks, we do not expect him to tip his hand on the size of the next move, which will depend on the upcoming releases, but we believe that he will push back against the idea of a dovish policy pivot coming soon. So we'll see how that ends up. Realistically, I'm under the impression that we haven't seen those inflation numbers top out, and obviously they're going to have to be a little more data dependent on everything that comes out. So realistically today, where will this Jackson Hole take us? There is the potential for market volatility. I think there's just going to be a move either way. So far, the Fed events, they've been fairly bullish. The reactions have been fairly bullish, so we'll keep an eye out on that. But there's a key area on the S&P at 4160 into the low 60s. I'm going to use that as a pivot, see if the longs or shorts take above or below. So keep that in mind. All the levels over the past week have just been consistent. We've been playing the 4140s, 42s day in and day out as a key resistance and support. And keep in mind that 4105, 4110 area, you let that slip. That's the bottom of the distribution where a lot of shorts can open up, and we're going to see those 3900s very quickly. So I'm going to be watching this. Again, it's going to give us some insight, I guess, but we still have the inflation numbers leading up into the Fed hike cycle coming in September. But it's still going to be important to give us a little more leeway over the next 2 days of where we could expect the coming week, 2 weeks of the overall market to come based on this Jackson Hole symposium. So it's difficult to say what the expectations are, what the outcomes are. It's just going to be a lot of babble about the economy and inflation. So we'll see how that shapes up. But a word of caution here leading up into it. There's probably, I don't even know what time it starts actually. That's probably something to take a look at. Economic Symposium 2022 start time. It just gives me a date here. If anyone know, 2 p.m. GMT. What the hell is that? So about 10 a.m. Eastern. 10 a.m. Eastern seems like the starting point for the Jackson Hole. So we're not going to have to wait that long to see some kind of movement or volatility or stagnation in the market. Depends on what we see. But realistically, the market's probably going to be reacting to speakers, and just keep that in mind. If you don't have a news squawk, get a news squawk that shapes things up. Financial Juice, News Squawk, those are both two great services. And it's going to be important to see what they say and how the markets react based on those decisions leading up into the end of the week, right? We got today and tomorrow, and then Friday, and then Saturday, they're going to be talking, but the market's going to be closed. So I hope everyone is in tune with that, understands what's going to happen today, and keep diligent, trade small. And I don't even know how many trades are going to be taking over the next 2 days. Based on this data release, on this economic macro babble. So let's see how that goes. Keep an eye on the Fed funds probabilities of hikes. 75 basis points so far is the leader at 60%. That could shift. It could shift a lot by September 21st. So thank you all. Hope you have an amazing trading day. It is Thursday. We got one more day tomorrow. And check us out at tradeproacademy.com, where we have our futures and options masterclass, where you guys can go and check those out. So let's see what's going on in these markets. Even market maker positioning has started to change slightly. The market maker positioning is relatively neutral going into this, but they're starting to open a few more positions to the downside, which could be interesting. Keep in mind SPY under 414 and then SPY under 412. Those are catalysts for the downside. If that doesn't happen, it doesn't happen, and we can see some of these bulls hold support. So thank you guys, and we'll see you in the live room. We're going to open those up for futures and options right now, and we'll see you tomorrow. Take care and have a great day.